All right, so peace and love to everybody. Today we're gonna be going over the strat, right? Now, however, I don't know. I just always go off of my spirit and things of that nature. I may just drop it because it's like 12 classes to this, right? Each one is gonna be about like maybe 30 minutes, some of them like 20 something minutes. I think there was a 15-minute one, but I think they're all like about like 20 something minutes to almost 30 minutes, right? And it's not me doing the class, it's Rob, right? This is a course that he did. It's just unlisted on YouTube, so it's like hard to find and things of that nature. How did I find it? I don't know. I just research a lot and I forgot where I was. It was a long time ago. And when I had found it, I was just like, oh my God, this is like Rob, a course. This is amazing. And him literally breaking down the strat, right? Where, yes, you can learn the strat off of YouTube from Sarah Sniper. She's super amazing. That's where I first learned it from. And then I went ahead and went to the creator, the original. And that's why I'm doing it this way, right? Presenting it to everybody else. Is because I want to give him his credit. You know what I'm saying? He's not here anymore. However, his design, what he birthed into existence is still here and it helps a lot of people tremendously. Um, and I just want to be able to do my part to be able to like give back and things of that nature. So how I said earlier, depending on how I feel, I may just drop it. I know I'm gonna drop it in the Discord once I'm done like doing the course. And I'm just gonna each class is just gonna be allowing him to talk, right? I'm not correcting because I can't correct something that he created, right? That'd be false information. However, I'm just going to not try, I am going to simplify as much things that I can, right? If you guys have any questions, please don't worry about the next person, right? You're not in class and you gotta worry about your classmates being loud and stuff of that nature, right? I can pause the video and answer your questions and things of that nature. Once I'm done with the class, if we have time, I'll go over to the chart and, just go over it. Like, on like what he's speaking on and things of that nature, finding what it is and things of that nature. However, I think y'all gonna really appreciate it, right? Because one thing that I would say, most successful like strat traders, like the ones that you know of, we've all been coached by Rob. We've all been taught by Rob or communicated with Rob in some type of way, right? The way I was able to communicate with Rob was just, being in the Discord, and I forgot her name. It starts with a L, I believe. It'll come to me. However, she just was fond of like my teaching and she connected me to Rob because she was connected to Sarah Sniper as well. And that's why I tell people, you never know who you're speaking to. Make sure that you're being kind and genuine and loving to others, right? And it's not just for that benefit. However, it's just how you're presenting yourself, right? So, yeah, let's get into it. So, like I said, if y'all have any questions, right? Hey, Moody, hold on. What does he mean by that? Feel free to, unmute yourself and say something. That's going to be the quickest way, or just drop it in the chat. And I'll get to it as soon as I see it. Right? Do. All right, y'all ready? And this is why I said I was doing the strap myself, right? My way and things of that nature. And however, I ain't gonna sit here and cap. I may still do certain things where it's like, all right, look, and this is stuff that I do. You know what I'm saying? And just throw some extra nuggets and things of that nature in it. Where is it? Cruising. Do. And you can see it says unlisted. All right. Oh, no, I'm not trying to play it on the TV. Chill out. Calm down. You're doing too much, Moody. All right, let's pull. Hey, can somebody mute real quick? Do y'all see this camera thing? I don't think y'all can. I think I'm the only one that sees it. Like, because I don't want it to be in y'all way. All right, awesome. Appreciate it, bro. All right, let me put it all the way over here. Cool. All right, so we starting it now.
With Quant Edge 4-week coaching program at T3 Live week 1, and that's usually how you're going to hear me introduce my videos. But for this course, we want to slow things down. I want to make sure you get every concept.
And I'm going to pause. Nah, you know what? I'm going to give you my sauce. Please pay attention. And certain things that he says, I will pause it so it can click for you and you'll see my language. Because it's his language too, right? It's just charting language, like when you have a knowing, not just guessing. Please take note of this, actionable signals, right? Because when I start simplifying, not the strat, however, like other classes that I do throughout the weeks and stuff, I'm going to simplify the way that I trade so you can just understand because I talk about the same thing. However, I know how to make you see. Like I know like people have told me that, I've opened their eye and helped them see certain things. Um, However, a student continues to try to learn themselves. And I found, I'm not gonna lie to you, a phenomenal way of just like, look, this is why you want to do what I'm telling you to do. And it's not because I'm telling you, you're gonna see it on the chart. So please, because I'm going to talk about that. Pay attention to actionable signals. Actionable signals and universal reversal patterns, not like candle patterns and stuff of that nature. Universal reversal patterns and actionable signals are what moves the market.
Step down exactly. So let's slow it down, right? Make sure everybody gets it, right? No hurry here. So, hello everyone. I'm Rob Smith of the In the Black Quant Edge VTF here at T3
Peace,
Live
Rob.
with the Quant Edge 4-week coaching program, week 1, where we're going to discuss actionable signals. As I give you time to read this disclaimer, it's important to remember, as far as we're concerned, it's talking about the universal truths. We speak only in quantitative.
You heard that? We speak only in universal truths, right? It's not just that I'm just in love with God and stuff of that nature. I just love the universal, the universe.
Facts as they relate to the 3 universal truths of price action. We do not say charts look good, charts look bad. What's your opinion of XYZ? We only pose the question, what do we know to be true? So you will see people on Twitter that are constantly tweeting out their so-called ideas, and they will have a disclaimer on their Twitter because they are speaking subjectively. Once we learn to speak only in the terms of quantitative analysis, you will see that there's no more opinions. We are eliminating opinions. We speak only in fact. We only ask, what do we know to be true? To begin, table.
Pause. I'm going to pause it, screenshot this, because this is what you're going to learn today. And this is what's going to be your homework. You don't have to do this for me. I'm asking you to do it for yourself. Unlearn what you have learned and relearn. Unlearn what you have learned and relearn. When this is done, I promise you, even throughout the classes that I'm going to do, I'm going to put it all in price action, right? I'm going to put it all in candlesticks so you can understand it. If you like patterns, I can put it to you in patterns, right?
Contents of what we will be discussing: candlestick formations, inside bars, the rev strat, the flip, combinations, the measured move, the importance of time, and the summary, and then some live charts.
And if anybody knows me, the measure move is where he does it his way. And what I learned to do, and I'm gonna show y'all on the chart, is grabbing that price range that I normally will put on a bull flag that I've done in the past. And I'll show you like, hey, you put it on this candlestick, the actual pole, and put it on top of your flag. And that's the same measure move that you're gonna get. That's how I was able to, I learned this, and that's how I was able to learn that just by having trading views, Miss Yaya. And I saw that and I was like, hey, what is this? And I was like, whoa, this is like the measure move, right? Just setting yourself up to be able to win. And you can utilize it for free before you pay for it. You're only going to get annoyed if you like the chart and you want your chart charted, it doesn't save it for you.
We can expect the price to move because actionable signals quantify specific technical conditions. More specifically, they show us important equilibriums that must at least attempt to break, as well as showing us when we can identify people caught on the wrong side of price movement.
When he says equilibrium, don't get lost. That's why I say ask questions if something or a language or a word throws you off and you don't know the meaning of it. Equilibrium are just inside bars, right? They're just inside of another bar. Just think of the one bar.
I'll explain exactly what that means. Section 1, candlestick formations. The regular hammer, candlestick formation regular hammer, forms after a previous lower trend series to potentially a signal of reversal off the lows. Open and close are in the top 33% of the range of the candle. This signal goes in force or triggers above the high of the hammer candlestick. We expect this to work for the following reasons. Ideally, the shadow or wick of the candle represents an exhaustion of long-side sellers combined with ill-timed new short positions. What does that mean? This, as you can see here, is the hammer. Downtrend, if longs have blown out and anybody short down in here is trapped, they trigger above the hammer right here. All right. This is known as a shadow. Some people call it a wick. This hammer triggers as soon as it takes the price travels above the hammer. That's when it goes in force. Although this is an actionable signal, it is not a universal truth because we cannot quantify exactly why it formed. However, it is an actionable signal because should the conditions I just described be true, the probability is high it will work. And that's
It's an actionable signal. It's not a universal truth, though. However, it's an actionable signal, right? That's why the probability of that is not that it's low, it's very high. It's high when you see that. I'm gonna just break it down for you. When you see that morning star, but it doesn't have to be a morning star, right? It's just that hammer at the bottom of the downtrend, right? I will break all that down when we get to the time frames and stuff of that nature. However, I want to allow Rob to break it down first, right? So always remember them hammers. Those are your babies, right? I'll teach you how to trade them though, right? Utilizing a larger time frame.
why we'll take that. The momentum hammer forms near the highs of a strong previous uptrend. The signal becomes in force above the high of the momentum hammer. We expect this pattern to work on the rationale that because it is in a strong trend, the shadow or wick of the hammer candle only represents a profit-taking pullback combined with ill-timed short positions. What does that mean? What that means is we have a strong move up into here. Now, classical technicians will look for hammers on the bottom. We know that we can quantify this, all right? Because if it goes down like this in a strong trend and then reclaims back to hammer up, we have the possibility anybody ill-timed shorts here trying to short into this strength is now going to be trapped against these two levels. We have reason to believe that there are natural buyers, which is actual buyers of the stock because of this, which triggers them both up here. Once again, this goes in force as soon as the price trades above the high of the momentum hammer.
And I just got to shout out Sarah Sniper because you're going to see as he keep walking, he's not going to talk about no 50% retracement. And that's why I love like just dope traders, right? And like if I know you dope and I've learned from you or if I communicated with you, I'm going to give you those flowers. However, that's also the 50% retracement, right? I can't put it on here. If you know about it and you see how I trade it, you're gonna also know like it came straight to the 50 and bounced straight right back. right? So also put that into perspective, right?
The shooting star forms after a previous uptrend to potentially signal a reversal off the highs. Open and close are in the lower 33% of the range and candle. This signal becomes in force below the low of the shooting star candle. We expect this to work for the following reasons. Ideally, the shadow or wick of the candle represents an exhaustion of the short side sellers combined with ill-timed new long position. What does that mean? Going up, here's the shooting star candle. Here's the shadow or wick representing potentially short sides getting blown out. Late, ill-timed buys. This goes in force below here as soon as the price breaks below the shooting star candle.
And he's gonna go to the next one. Oh, I stopped it at 609. Beautiful. Hey, if you're in the Discord, go into the general chat. Jones, I didn't want to call you Cajun Whisper. You is though the Cajun Whisper. Jones, bro, big shout out to you. If you just seen how he was talking about that hammer, go ahead and check. You already seen how she gapped up on the daily, right? I'm on a 3-day checking her out right now. So I'm gonna be looking to see if we get a momentum hammer off of that daily as well, or any kind of pullback to see if we get that momentum hammer to go ahead and swing her, bro.
Although this is an actionable signal, it is not a universal truth because we cannot quantify exactly why it formed. However, it is an actionable signal because should the conditions I just described be true, probability is how it's going to work. The momentum shooting star, the opposite of the momentum hammer, forms in the lows of the previous strong downtrend. The signal goes in force below the low of the shooting star candlestick. We expect this pattern to work on the rationale that because it's in a strong trend to the downside, and the shadow or wick of the shooting star candle only represents short covering, pullback combined with new ill-timed long positions. So what does that mean? It's coming down hard, right? And then it attempts to rally back up. Anybody who's short this potentially is looking to cover as they've got profits, short covering. But if the real sellers, which is the people driving it down, right, are still alive, we got some shorts covering, and anybody trying to bottom pick or buy this on the way down, obvious stop would be the low of the candle, and that's where it goes in force. Momentum shooting star goes in force as soon as the price breaks below the momentum shooting star. The bullish kicking pattern occurs when a red bar is countered by a green bar that gaps above the red bar's entire range. The signal is in force so long as the price is above the opening price of the second candle. We can expect this setup to work on the rationale that the long side was decimated during the red candle. Short sellers could stay short as the bar went out on the low. The gap causes all short sellers during the red candle to flip to a loss immediately, and ideally it combines with new longs re-entering as the price is now rising. You can see here, anybody who was long was getting crushed in here. And anybody short could stay short because it's still going down. However, once it gaps back up into here, everybody who stayed short or got short in here is now immediately underwater. This stays in force so long as it's above the opening, right? So all of these guys scramble to cover, and anybody who blew out long, if they're trying to re-enter, this makes for a very powerful pattern here.
And understand how he always says it. If it stays above the opening, right? And that was my confirmation. When I had seen this, I believe it was, I seen this in 2022. It confirmed everything I knew because I'm like, this is what I'm seeing. And then I always knew it, like the body of the candlestick is the support. That's why it's always bouncing from there. And they said, if we lose that, they go take the liquidity, right?
Conversely, the bearish kicking pattern occurs when a green bar is countered by a red bar that gaps below the green bar's range. The signal is in force so long as the price is below the opening. We can expect this setup to work on the rationale that the short side was decimated during the green candle here, and the long buyers could stay long as the bar went out on the high. The gap causes all buyers during the green candle to flip to a loss immediately, and ideally it combines with new shorts re-entering as the price is now falling. Here. Everybody can stay long, short side getting taken out. As soon as it gaps down into here, it stays in force so long as it's below the opening price here.
Right. And that's his pattern. PMG, boom, liquidity, 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 right? Liquidity right there. First of all, that's our entry point, right? So we see for a fact that this opened up basically right at the entry point, right? So when it did that, it could have pushed down a little bit. However, we know that before it went further down, it pushed back over its opening price and tried to hold the support of the previous candle, right? It rejected, not because of a 50% retracement on this candlestick. This can be, we'll get to that, a different time frame and things of that nature where you're hitting a different 50% retracement, right? Where you have to be able to identify that and have multiple time frame analysis, right? Multiple time frame analysis is different than knowing the continuity. Continuity is within the time frames, right? And knowing what participants are buying what, right? However, this is a PMG as well, and that's why it also went out and took out the rest of that liquidity. It just didn't get all the way here, and basically, yes, it did, and you can see that, and then it wicked right back up.
Why price moves? Actionable signals is the why. Why would the price move? Most people don't understand why we can expect the price to move. Actionable signals are why. Although we use the candlestick hammers and shooting stars as actionable signals, they are not universal truths, as we don't know exactly why they formed. Conversely, inside bars and rev strats are universal truths, as they formed equilibriums or countered them, which cannot be disputed as the bar failed to break a previous high or low. All right.
And that's how we traders know from other traders, where it's like, you're not executing on an inside bar correctly. How did you lose that trade? That's why you'll hear Sarah Sniper, Alex Options. He's also another fire trader. 8X too. However, that's why you'll hear them say like, hey, I wonder who knew, like on their Twitter, I wonder who knew about this inside bar and how we was just gonna smash straight up the PMG up or whatever they'll say. That's why we talk that way. Cause it's like, how did you not know? Like, it's an inside bar. That's the easiest thing to know what's going to happen.
So what does that mean? Let's check it out.
Let's check it out.
Section 2, inside bars. We go to inside bars. We're going to identify whether you're trading a retracement or momentum. There is a difference. Right?
Talk to him, Rob.
Quantified. An inside bar is defined by any bar whose range is equal to or less than the previous bar's range. The bullish inside bar breakout. This setup goes in force as soon as the price goes above the inside bar. This is a universal truth, as it cannot be disputed that equilibrium has been formed and a breakout of that equilibrium is being attempted. When you hear me on the VTF, I will not say bullish inside bar breakout. I will say inside and up, right, to abbreviate it, to make it faster. But for right now, to understand it, this is an equilibrium. It could not break above the highs or lows of that. No one can dispute that. It goes in force as soon as it breaks the inside bar to the upside here. Right here goes inside and up bullish breakout.
Facts. Pause it. I'm always shouting everybody out, so let me go ahead and shout Moody out and give y'all some sauce. So I took what I learned from Sarah, right? Because when I learned that, I'm like, no, that's a fact, right? So it's when everybody's like, Moody, what candlestick? Why? Which one is it? It's all about the chart. It's all about the chart. I'll teach you how to decipher the time frames. However, it's all about the chart. I'm gonna fib this, right? So just imagine that white line on my chart, right? From there going all the way there, the 0 to the 100. I normally do the 100 at the top. I do my fib from the top to the bottom so that I can know that the 0's right here. So if I'm even below, I'm trying to enter that range, right? However, that's the fib. So the 50% retracement is at the 50% of this candlestick, right? So if we go and keep going And we know that this is the equilibrium because we're trapped inside of that bar and we're trying to get out. And you know, hey, Moody's going to talk candlesticks. We're looking for that morning star. However, right, we also know universal truth, 50% retracement. The candlestick that just closed is 50% over that candle. And look at how it's like slickly support, right? It's probably super perfect and flush if I can put it on there, right? So I learned that, and that's what gives me that extra edge. And of course, you know, my RSI and a whole bunch of other stuff.
The bearish inside bar breakout. This setup goes in force as soon as the price goes below the inside bar.
What I'm going to help you be able to see and understand at all times is when you see this chart right here, any chart, you're going to be able to know exactly when to get in. I don't care if it's this candlestick going down here, you're going to know that we were going up. I don't care if it was pushing up like this and we got this candle, you're going to know we're going down and you're not going to be scared. There's just a risk to it, and you will always feel that risk. That risk, remember, is risk. It's not fear. Scared is associated to fear. Risk is not associated to fear.
Universal truth, as it cannot be disputed that an equilibrium has been formed and a breakout of that equilibrium is being attempted. Here, see the inside bar. As soon as that equilibrium is broken to the downside, the price moves below.
Did you see that? Is because when you're fire at what you do, however, you're going to, it's not that he's slipping up. I'm just going to catch it because I'm learning to slow down and really add more value. I know I'm valuable, however, I want to add more value. Whereas like I'm a rewind it to just a tad bit. You're gonna see him talk about this is the equilibrium that he's talking about. This is the entry point. Boom. He could have just stood right there and told you that. However, he showed you the market structure, right? You're just seeing these candlesticks and you're like, hey, but Moody, it's not like flush like right here. It's the candles that you can't see right here that is flush with that entry point, right? So I'm gonna just rewind it just a tad bit so you can be able to see that. Trust me, I know sometimes you're not going to know what questions to ask because you're learning something. I'm going to slow it down even more than he's slowing it down.
Out of that equilibrium is being attempted. Here, see the inside bar. As soon as that equilibrium is broken to the downside, the price moves below that inside bar. This goes into force.
Facts.
Concept of this here.
Important.
Momentum or retracement. If the bar previous to an actionable signal is green and the actionable signal is in the upper 50% of that bar, a break to the upside is considered to be momentum and is breaking into new recent highs. It goes up, it goes inside, and then goes to the new highs, momentum. If the bar previous to an actionable signal is red and the actionable signal break is to the upside, is considered a retracement as the price just recently dropped. That means if the price drops,
that's when you hear people on Twitter or Instagram and you're like, and you see them with a trend line or you see them with a line on their chart and they're like, oh, it just broke this level. We didn't get in. Reason they didn't get in is not that they suck or anything. You have to be able to identify with the trader. If they didn't just get in and it just broke, they're not a aggressive trader, right? They can be very profitable. They can be really great. They're just not aggressive. What you're normally going to hear, right? Because it's not the universal truth. You're going to hear a break and retest of the structure or break and retest of previous market structure or support, right? Where it's support turn resistance to test it again to hold resistance and drop back down. Bear flags.
then goes inside and goes back to the upside, we know we have at least some retracement because it has just gone down. It's important to remember that these conditions are subject to the conditions of the other timeframes outside of the stated inside bar setup, which I'll cover when I get to the timeframe continuity principle. as well as broadening formations. The importance of inside bar setups. Oftentimes the bar previous to the inside bar, which we call the mother bar. So you can see here's the mother bar, and then it goes inside. So the bar of which the inside bar forms is called the mother bar.
Let me check the chat real quick. Dang, I'm like shaking my head. Are you going to? Yeah, yes. Don't worry about it. I got you. Just pay attention. It's still at a very important spot right now. Hold on. That's blood. There it is.
If this represents a large enough range, the inside bar isn't strong enough to get out of it, which means inside bar breaks down here, but it's not strong enough in this time frame to take this out. All right. This usually occurs when the bar forms in the middle of a large range like this.
In the middle of a large range, you see how you're saying like this? You know, if you put the 50% retracement on it, you know that the 50 mark is like right there, because that's its market structure. That right there, that's going to be its market structure, right? Okay, that this candle broke through, don't ever get confused. That's the market structure. That's why you had that entry point. They broke through, boom, boom. They were just taking liquidity. And what you'll normally hear that is not universal truth is that it's choppy, or it's like, oh man, they're stop loss hunting, bro. All that stuff is bullshit. All these candles here are stuck inside of that range. That's what it is, right? And when you understand that, you understand what candlesticks to actually trade, and you know, set your alert, because the best move is going to be the breakout of it, and it's going to break out. This is called consolidation, right? However, if you're really skilled at what you do, you know that you can always trade the range of what it is, right? And you can always cash the bottom and things of that nature. If you're good at catching the bounce off of the liquidity, you'll always be in profits, right?
We want to avoid that. All right. This is where we avoid the inside bar setup because it's nowhere near taking out the mother bar. We can expect a new broadening formation series to begin as the price consolidates within that mother bar. This will be covered in detail when we get to the broadening formation portion of the course. Right now, I just want you to understand the actionable signals themselves. However, an actionable signal is close to taking out the mother bar. We can take the trade on the belief that the signal will take the price beyond the mother bar's range. You can see this here. It's a 2-bar setup. Right inside, and we'll get to this as a rev strat, and we're about to get to that. But here, you might say we're not going to take this because it's still inside this mother bar, and that's why you might not have taken it to the upside on the belief it might not be.
And that's why I said it was, I also mentioned bear flag, just to like slow it down and talking your terminology, right? Because it's always good to be able to speak in different languages to be able to communicate and converse with someone else, right? And that's why you see that bear flag. It's just all was stuck inside. This one rejected the 50% tracement, and you can see that, hey, it's trying to hold the support of the other candlestick. However, we know that entry points are right here and right here, and the candlestick is not holding over that, right? So that's why you also see that too, right? In just a different language. However, let's stick with this, right? Unlearn, you just want to be able to, oh, I have that in my pocket. I understand that in different forms.
Be strong enough to get out here, but then the 2-bar pattern does break out of here and gets out of that. So you can see the difference between a tighter range than those large ranges, and we'll continue. We'll get to that as we move along.
See why? Because he said when he move along, it's just because he'll be on here teaching all day, all day, all day. He's breaking it down to a course. Why? Because he's seen his mouse. He was gonna go to that. I don't know. I'm just like always trying to identify why he did that, right? Where this was an equilibrium. It was just a bigger range, right? It broke out and then finally broke out to the bottom this way, right? This one is just the fact that, hey, if you wasn't doing multiple time frame analysis and you was trying to take it all the way up and be greedy to take because you knew you was inside of another range and try to get greedy and take it, hey, it just, that's why it's a probability game as well, right? We know what's going to happen, but you still have your probability out of it. And it just all depends on how good are you with your execution, right? It's you can learn this. Let me pause it.
The danger.
You can learn this, right? Rosa, yeah, I know her as blockchain babe, right? She said something very important tonight or this evening on Facebook, and she has said a lot of people are addicted or something of this nature. A lot of people are addicted to learning, but they're allergic to executing. Executing, you can learn anything. You've been learning your whole entire life about anything. It's the execution part, right? It's the execution part. You got to have a freaking urgency of that shit. You got to know this has to get done, right? And it's not that I'm just being passionate. That's how you have to be about everything. That's how you are to make sure that you get to work so that you don't get docked or get written up or anything. I used to work, so I understand it, right? Take that same discipline when you clock out of that system and create you a system where, hey, I'm implementing these things that I'm learning, right? However, you can always do it with your money or not your money. I'm someone that always did it with my money. And that's why I feel like I advanced super quicker. Why? Because I'm dealing with all of the emotions and now I'm having to learn to manage them correctly and understand, hey, you're always are going to feel this. However, it gets it gets lighter and lighter and lighter. The more you do it and the more consistent you are. And what really matters is your bad days. When you're red, how do you speak to yourself? Right? Not only how do you speak to yourself, how do you conduct your day with even other people? Are you aggressive with them? Are all of it matters? Every little so is the law of accumulation. Every little thing matters, right?
Of trading something that is still forming an inside bar. This is very important. Much like the multiple inside bar condition, this condition is something few traders realize, but it's extremely important to know. We want to know if we are trading something that's still inside a mother bar on any time frame because it's considered consolidating until it can make that higher, lower, low. This is what causes the condition for people to call choppy. We don't say choppy. We understand that this is going to be doing this. We know to expect this type of action under this condition. There are periods of time when we can take trades in such condition, which will be covered with the other portions of the course. However, for this reason, the bar must close inside before it becomes actionable. That's very important. When you pull up a chart and you see something, that's an inside bar. If that bar is still live, it is forming an inside bar. It is not inside as yet. All right. Therefore, the price is still considered still inside until that bar closes. After it closes, we have established the equilibrium, and then it is considered an inside bar.
Oh, understand that, right? When the candlestick is still open and it hasn't emerged the other candlestick and it is stuck inside of the previous candlestick and the time frame is still going, whether it's your 5 minute or 1 minute, that is not a inside bar yet. You have to wait for the next bar to come out and confirm that that's an inside bar, right? And when we trigger, that's why we get in. If you're aggressive, you can wait. If you're not aggressive, you see the terminology I'm utilizing, they will help you not be all over the place. Man, I don't know, because you're using the right terminology with the right definitions of what it means. And you can define it for yourself to see what it actually defines to be. So you don't be confused, right? Because people that know words will definitely try to confuse you if you don't know the definition of them. So that's why in the Strat world, or even knowing trading, we're not going to wait for a candlestick to close. That is horrible, right? Why? Because if we're waiting for the candlestick to close and we just trigger to go up, you're waiting. You know what I'm saying? Then you're not doing time frame continuity and analysis to know how far that measure move is going to actually go. So if you wait for that candlestick to close, the next one could get stuck and immersed inside of that one. If you're not doing time frame analysis, multiple time frame analysis, and as well, hey, I don't know who's unmuted, but if you don't mind, check your mic and mute yourself, please. Dang, I forgot what I was saying. However, you just want to make sure that that candlestick is open and that your move is still there, right? Like just think of an inverted head and shoulders and you're getting that final push that finally took everything out. You know what I'm saying? And had you seen your PMG or you seen the liquidity and it's going, going. That's why you always see, oh, it closes and something starts to retrace it, right? Because it may form you a momentum hammer or something of that nature. However, establishing multiple time frame analysis is going to help you to be able to identify that even quicker, right? That's why you see me, I love the 1 minute chart. However, multiple time frame analysis, I know to utilize the seconds chart if I'm using that 1 minute chart now, right? The first time I've heard about it, you heard me. I'm like, nah, I ain't gonna get on there. Why? Because the things that I'm hearing and I'm seeing how fast it's going. However, you got to face your fears. Why am I feeling like this? Let me go identify. What is this? What's going on here? Right?
There's the danger. There's something that's forming an inside bar from just this week. This is Facebook. And you'll notice here on the right, inside bar here. It has now formed. The week is over. But during this week.
Do you see the price of Facebook? Okay, let me stop. You see how I just be looking at people chart? Do you see the price of fucking Facebook? If you don't buy, freaking Meta shares, I'm gonna be mad at you.
When it cannot take
Wait
the
for the
highs and not
pullback.
take the lows, and we see this forming an inside, you can expect action like this. This is the 60-minute. This is why people say it's choppy. I'm like, of course, it's going inside. You ready? Oh, it's going down. No, it's going up. No, it's going to go down. Oh, let's gap it up. No, let's bring it down. Okay, let's try and bring it up again. No, again to down. No, up. No, down.
And that's why whenever we have two different time frames, I know you guys never see me do that because that's what I was doing when I was in like back in 2021 and I just was able to read it off of one time frame now. That's why you'll see Alex or Sarah with multiple of those time frames. However, Rob is showing you like what is truly happening. We're trading this time frame. However, we know what's happening and how to utilize and what to do. Now, if you just know candlesticks and how to trade support and resistance and you know levels, you're going to be able to just murder the chart.
The down, you can get killed in here, right? We want to identify this condition. Most people miss this because they are not looking at the longer term charts, right? We are starting at the monthly, the weekly, the daily, and working our way down so we can identify this condition.
Shout out to my boy BW, Mr. I walked down the time frames today on his class. And shout out to Milena for saying, oh, I'm going long on NQ and saw exactly what she wanted. You go, girl.
Once again, I'm going to get through this because it's very important. This is U.S. Steel from last week. You'll see over here on the right, inside day, completely within this bar's range. Once again, if you just look at the 15-minute chart, whoa, it's going up. No, it's going down. No, it's going up. No, down. No, down. No, up. No, down. We can expect this kind of action, which is going to create rev strats, as we're going to get to the next section of rev strats.
1, 2, 3.
Section 3, the rev strat. The reversal strategy, or as we call it to abbreviate it, the rev strat, is a reversal of the inside bar setup. This setup occurs either in the bar following an inside bar or a 2-bar setup following an inside bar. We can expect this setup to work because an equilibrium breakout was attempted and is failing. This means that one side has attempted the breakout has been met with a stronger force. This is a universal truth as an equilibrium break has been reversed, which cannot be disputed. This can be very powerful, and some people choose to only trade this setup because of its power. The bullish 2-bar rev strat. Bullish rev strat occurs when a hammer forms after an inside bar and price confirms the setup by moving above the hammer and going in force.
Right.
We expect this to work not only because we can identify the equilibrium reversal, but also because of the mechanics of ill-timed shorts placing stops at well-known pivots. So what does that mean? What that means here is we have the inside bar here. The equilibrium attempt break to the downside, which it does. However, by the time the bar closes, it comes back up into this range without taking out the inside bar to the upside, right? Still back opening and closing in that inside bar range and forming the hammer. It goes in force as soon as the price moves above the hammer. So we'll get to how powerful this can be when we get to time frame continuity, but the ill-placed short stops would be on the top of the hammer, the top of the inside bar, the top of the mother bar. When the rev strat works properly, those two trigger the third. Stop them out, stop them out, stop them out. 1, 2, 3, pow. That's why this works, at least in portion, until we get to time frame continuity.
Yeah.
In the next example, those stops would be above the hammer, right? The inside bar and the mother bar, right? Again, during the periods of full time frame continuity, which will be discussed in the next video, there's no reason to believe this setup won't work. And reiterate things, but let's pound it in the head, right? So, or in the previous example, I should say. Because the next one, once again, is the bearish 2-bar rev strat. So once again, when you hear me on the VTF, we'll say rev strat down. For right now, this is bearish because it is going down. Right? Bearish rev strat occurs when a shooting star forms after an inside bar.
Jay, you want me to rewind that? I know you just said, dang. I'm gonna leave it paused for a few more seconds. Just let me know, yay or nay. Nah, just open my eyes. All right, cool. I'm glad that you was able to see it.
Price confirms the setup by moving below the shooting star. Once again, this is our price equilibrium inside bar. It goes up, comes back down and closes, forming a shooting star, countering the inside bar. Right? Once again, the ill-timed pivots for anybody here trying to stay long would be the bottom of this, the bottom of this, and the bottom of this. Rev strat 1, 2, 3 triggers them all. Boom, 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 boom.
Clean the whole entire gap, and that's why I be finding the levels.
1-bar rev strat. This occurs when an inside bar is broken to one side, then reverses where the price then also breaks the other side of the inside bar during a 1-bar time frame. We can expect this pattern to work as an equilibrium is being reversed, which cannot be disputed. The bullish 1-bar rev strat. Setup occurs when the inside bar breaks to the downside here, then reverses higher to take out the inside bar in 1 bar. As opposed to the 2-bar setup, this 1 bar attempts the downside, rips to the upside. You can expect this setup to work as equilibrium has been reversed, which cannot be disputed, as well as expecting stops on the top of well-known pivots of the highs of the inside bar and the mother bar. Once again, they attempted the downside. This goes in force as soon as it retakes the other side of the inside bar. Once again, any ill-placed shorts here and here, as well as they're meeting a stronger force going the other way.
Like I bet Sarah was like, I'm gonna figure this out. And that's why she put the 50% retracement, because it's like, bro, I gotta figure this out. You know what I'm saying? You could figure it out with the multiple time frame analysis. Having that 50% retracement, it's perfect because you already know what's going to happen.
1-bar rev strat. The setup occurs when an inside bar breaks to the other way. Upside reverses, then takes out the downside. Once again, inside equilibrium, triggers to the upside, then reverses and completely takes out the other side. Goes in force below here. This is where the rev strat triggers, below the equilibrium. Once again, any ill-placed stops would be here and here. Stronger force met, brings it through. 1, 2, they're gone. The 1-bar rev strat becomes a 2-bar rev strat. This occurs when 1-bar rev strat closes and forms a hammer or shooting star candle. Cover the importance of this in the broadening formation discussion, but because an actionable signal has formed following an inside bar, this is still a countering of the known equilibrium. The only way this can occur is when the price equilibrium breaks. 1-bar rev strats and then retakes the original break outside the inside bar. In this case, the new rev strat triggers above the hammer that follows the inside bar. So what do we mean by that?
Oh.
What that means, here's our equilibrium. So because it's...
So when he was showing you that other time frame and he was talking about the equilibrium, and it had a little wick like this, but it was a bigger candle like that. You just went to a small time frame, and that's why we were able to see that.
Outside like this bar is completely outside of this bar's range, which will be important when we get to the broadening formation portion of the course. What that tells me is that it had broken both sides, right? It's telling me it's broken both sides. So at this point, went up, it went down, but then it's now resolving, right? Outside of this, but it's an actionable signal. Any actionable signal after an inside bar is a ref strat. That goes in force above this hammer. Right.
Listen to what he's saying, not to what someone else is saying, right? Not even Moody, right? Listen to what he's saying. He created this, right? And if I need to unlist that video on YouTube so y'all can see the interview I did with him. Because after watching this course and you watch the interview, you will see certain areas where Rob and I laughed or was saying certain things and it was noisy in the background. And I asked him a few things, or I asked him about certain time frames, and he was like, yeah, like you'll end up seeing. And I was just, okay, cool. Because it's not that it's a secret or anything. You're learning at that point and grabbing those gems, right?
Here. So as we conclude this first video, most importantly, to take out of this first video, an inside bar must close, or it's still forming an inside bar. It's very, very important. A rev strat must follow an inside bar because it is not a classical technical reversal pattern where you'll hear that technical analysts say it's a reversal. It is a reversal of the equilibrium. So those two concepts, very important to take out of this first video. And I will see you in the next video as we continue with actionable signals.
My bad, Bella Honeybee. I didn't mean to
Have you heard of turtle traders?
I didn't mean, man, I thought I just paused this. Hold on. Give me a second. Nobody trying to hear this ad. Boom, 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 boom. All right. Oh, don't close that. Boom. What happened? Oh, reopen that. Ah, let's go. Boom. Here we go. There we go. All right. Boop, 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 boop. Hey, you said I was about to say. Nah. Oh, let me stop recording this class.